Hello, friends. This is Subhendu from Logical Investing. Welcome to yet another episode of Logical Investing with Subhendu. Um, I wanted to talk to you in this episode about a couple of things which any new investor has in mind. Right? Whenever the stock markets are going up, suddenly there are a lot of people who start taking a lot of interest towards the stock market because we can put our money in there, the money grows, multiplies. Of course, who does not want money to grow, right? So at this point in time, whenever it so happens that whenever we hear about a particular stock, we go into looking at the stock price, and then we see that the stock has already moved up by 5, 10, 15, 20%. Then we feel that is it the right time to get into this stock right now? Or should we be waiting for another stock? Sometimes it happens that we do not buy. Let's say particular company X, a friend told us, we go in online, we check what is the stock price. The stock price shows that it is an upper circuit, let's say for 10%. We feel that okay, this the opportunity is lost, maybe we'll buy tomorrow. We put it again, we don't get it. It is again locked in an upper circuit. Then after that we realize that should we get in, should we not get in? And it so happens that one day we have put a market order, upper circuit breaks, we purchase the stock, and then the stock goes into a lower circuit. We keep thinking that whenever the stock market was going up, whenever I bought, the stock came down, and then it is in a lower circuit. The next day we log in and we see that the stock has hit another circuit, another lower circuit. Right? We continuously think that what are some of the stocks which, if I can get in, that is going to give me massive returns, massive multi-bagger returns in the next couple of months, years, and so on. As an investor, I have also been thinking of all of this, and I have also been through similar situations. Now, over the last many years, I would say that I have looked at multiple sources, have read books, I have looked at videos. There are a lot of videos which I have consumed in YouTube, which has also helped me to understand this in more detail. And I thought that I should share my knowledge with all of you so that you can also start looking at investing in stock markets as a scientific exercise, as a very process driven hard work, not just some random guesswork based on somebody else's tip or information and so on. So there are four things which I wanted to talk about in this video. So the first thing is, what stocks do we buy? There are some thousands of stocks which are listed in the NSE and the BSE. What are some of the stocks which we should be buying? What are some of the stocks which, if we buy, they will help us in growing our net portfolio, right? So how do we do that? That's number one. Number two is how much do we buy, right? Should we go in all in because we know that this is such a bullish stock, this is such a great company, this has such great earnings? Should we just jump right in and put all of the money into that? Or should we put a limited amount? What is it that we will do? We will talk about all of that. The next point is when do we enter and when do we exit? I'm sure all of us know about the story of Chakravyuha from Mahabharata, where Abhimanyu understands how to get into the Chakravyuha, but it doesn't know how to get out of it, which we do not want to do. So we definitely need to have a plan in place, right? Anything which we are approaching, as I said, we have to approach it scientifically, and this is not a game of guesswork. This is not that okay, today I have a lot of capital which I can deploy in the stock market, so I will put it in. Tomorrow I need some money, I will sell some shares and I'll get out of it. It's not that simple. It doesn't work that way. If we do that, we will erode our capital very quickly. And I have done similar mistakes in my past career. I have in my past investing journey, and I have learned the lesson in the hard way. In case if you have not subscribed to the channel, please do, because that helps me, that gives me a lot of confidence, encouragement, so that I continue to come up with ideas and share my learnings and thoughts so that all of us can learn together. Please do let me know in the comments below about what you liked or did not like in the video. I'm just getting started, so I would appreciate all feedback so that I can learn and then I can make myself better. Okay, so the first point to think is, what stocks do we buy? There are multiple stocks which are available in the stock markets. Maybe some thousands of stocks are listed on the stock exchange in NSE and BSE. What are the ones which we buy? The first point which I look at to picking up the right stock is if the stock is undervalued in the market. If the stock is trading below its expected values. Now, how do we find out these expected values? How do we come up with such numbers? Those will be discussed in a separate video. But first point to note is that if the stock is undervalued, absolutely that becomes a candidate which we should be looking at to do our due diligence. The second point is if there are tailwinds in the industry, if there are tailwinds in this sector. For example, if it is in the green energy theme, we see that there are a lot of things which are happening in the green energy space, solar, wind, so on. And if that is an area which is going to get a lot of government flexibilities, government is coming up with rules which is going to help in making the industries run efficiently in that industry, making the companies run efficiently in that industry, then that becomes an area to also look at. Then the next point is, another category is companies which are in the process of revival, and which are turning around. Sometimes what happens is companies, have a particular way of business model, and then that works for a certain period of time, and then when the environment around it changes, sometimes companies take a little bit of time to recalibrate themselves, readjust their path of growth. And so what happens in the meanwhile, the stock price, the earnings, the revenues, and all of that plummets. When it does, the stock goes down, and then when revival happens, that is when we know that these are kind of stocks which we should also be starting to look at. They become the candidates to be picked, on and be a part of our portfolio. There is a lot of research which needs to be done. So understanding each of these different areas or these different types of stocks is going to absolutely of help. Then how much do we buy, right? Now, should we be putting a lot of money into them? Should we be putting a very less money? It's all dependent on one thing. You know what? That thing is conviction. How much conviction do we have on that particular stock? How do we know that? We will know that when we have done our research. If we have enough conviction on our own research, if we have done the due diligence really well, then we would know that this company is going to do well. And then we put, we do our own research. We understand about the company, about the management, about the people in the company, about the products which they are servicing, about the customers, and all of that. And then we know that, okay, this is one good company. Even if we are invested in it for a very long time, it's absolutely going to, our capital is protected and it is going to appreciate. So when our research is strong, it's easy. We have done our research and all of that. When we have done, probably if we are just getting started, it is difficult to have conviction because we have not known, we have not seen, say suppose I have come up with an idea, and that idea or a particular stock selection criteria, that criteria has, let's say, gives me 2 stocks. Now, if I put I am not sure how much money should I put, because I am not sure if the stock is going to go up by the amount which I am expecting. So when we are starting new in the market, when you are starting new in the market, when the conviction is low, you should put a small amount of money. You should put a small amount of money for, please do not think that if I am putting only a very small sum, then even if the stock goes up by 30% or 50% or even 100%, right? What would I get? Because the initial capital which I have invested is very low. The intent is not to have a portfolio which multiplies overnight. The intent is to understand the process in it. Once you understand the process, that based on this process, whatever stocks I had selected so far, they have helped me to multiply my capital, then then your conviction will grow. And when your conviction grows, as your portfolio will in due period of time, then you can start putting in more money, and that money is going to multiply. So to start with, very simply put, to start with, when you are starting, do not invest more than 1% of your entire portfolio in any stock. More than that is not advisable. There would be there might be people who would say that concentrated portfolios are really good, because then you have a lot of conviction, you put money, that if that stock multiplies, becomes 3 times, then your entire money goes 3 times up. But I have my own reservations. Reason being, if you have a very concentrated portfolio, you should attempt that only when you have been in the market for some time, you have seen the ups and downs, you understand, you have seen what structures, what strategies work for you. Because see, think of it this way: my age is different from your age, my my portfolio size is different from yours, my risk taking ability is different from you, depending on multiple situations. No two individuals are the same. And if I try to emulate another investor based on his tip, based on his information, whatever information he has given, I probably am going to make a choice which may not be in line with my risk taking ability. So what happens when that stock goes down? Your friend doesn't sell because he has conviction, he would not sell. But when the stock goes down by 30%, you probably are panicking, because that was never in line with your risk appetite anyway. So you would end up selling. And then shortly after you sell, ironically, most of the time it happens with me and with multiple other investors who I have spoken to, that the moment they sell, couple of days, and then the stock starts rebounding from that position or that level. So I would say that never put all your eggs in one basket. And so when you are starting new and you have less conviction in the kind of research which you have done on your own stocks, please ensure that you put less than 1% of your entire portfolio, so that even if the portfolio goes down, you are not impacted much. And even if it goes up, then also, even though monetarily you are not gaining anything, what you are gaining more is the conviction which you have on the stock picking ability of yours. That will help you in the long run. So this is number 2. Number 3 is, when do we buy? Right? So sometimes the stocks are good, you have found them through your research, but by the time you find them, they have already run up. Now, what happens in such cases is, because you think that, oh, I have done so much of research, I have found this stock, my friend told it, and I really agree, it is filtering, it is coming across in all of my filters, and then so this is definitely a stock which I should get in. But then the stock has already run up. If you get into that stock because of fear of missing out, it would not be a wise decision. There are multiple opportunities in the stock markets, in bear markets also. Forget about the bull markets. In bear markets also, there are opportunities. See, the basic difference between a bull market and a bear market is that, I'll give you a simple example from my own, stock picking, or stocks journeys. There are some stocks which based on my selection criteria, I would have picked up some stocks, right? I would have felt that, okay, let's say the stock is at X, I feel that it would reach let's say 2X, it will become double in in maybe 2 years, right? And then in a bull market, it so happens that sometimes the targets get achieved even in 2 months time frame. But expecting that the same stock is going to do the same 2X in a 2 months time frame and another time, and in a bear market, is not the right expectation. So sometimes such stocks might even take 3 years or 4 years to get to that double, or even they might come down and then go up. So markets are always going to be different. All we have to do is to find the right stocks, find the right value of the stock to get in, and then stay invested. We should not be worried about missing out on a stock. I was doing this research this morning. There are some 139 stocks which have doubled in the last 1 month, and more than 300 stocks which have doubled in the last 3 months. Now, when we do not have to have all of those 300 in our portfolio. We just have to have, few of them or one of them, so that we can make, so that we can make a good amount of money. So this is about should you take an entry. Wait for the levels. If you think genuinely that this company is good and then you want to invest in it, then do paper trading. Start tracking the stock and then wait for a correction. If the correction happens, good, get into the stock at the price which you wanted. If the business conditions have not changed and the stock has just come down because the overall market is correcting, that's fine, get in at that time. But if the stock doesn't come down to your pricing, that's okay. There is always another opportunity to look at in the stock market. So that's about when should you get in. Now, when should you get out? That is the most important one. A lot of people understand that, getting into a stock, how do you get into a stock? But then getting out, we are always worried. See, if we buy a stock and it comes down, we are instantly worried that, okay, but anyway, we had bought a good company, so we will hold. So in a loss, we hold. But when it gets to profit, let's say we get 25% profit or 30% profit, then we always have that feeling in mind that, is the stock going to come down? Should I sell the stock? Should I sell some part of the stock? No, what should I do? So some of that always is, there in the mind. So like I said, there has to be a plan. There has to be a plan of what you want to do from that stock. So when should you sell a stock? The first thing which I do normally is that I have a target in mind, that this is, if the price reaches this level, then I will, try to take out my investment and let the profits ride. Okay, so it can be 60%, it can be 80% from my buy price, and when it touches that, I take out my investment, and then I keep only the profits and let the profits ride till the business continues, till the business environment is conducive, till the ecosystem is supporting, and so on. Now, the second thing is when the business fundamentals changed. For example, we had just an example, simple example. Let's say we bought into a stock because it was a zero debt company. Okay, it had been a zero debt company for many years. Now, suddenly you see that over the last couple of quarters, the debt levels are going up. Some amount of debt is absolutely acceptable, because when companies are doing their capital expansion, they do take debt, and then they fund the capex through the debt, right? But sometimes what happens is, when it crosses a particular threshold, when some of the ratios starts to be to look different, which you are not very comfortable with, you can take a call to get out of the of the stock. And sometimes what happens, sometimes tailwinds are there which had supported a stock so far, and then now those tailwinds no longer exist. For example, let's say there is a particular sector which is getting a lot of push, so that we are able to meet the demands of the industry. Now, once we have met the demands of the industry and now we are creating surplus, probably some of the government rules and regulations which were pro that industry will no longer be there. The kind of benefits the companies in that industry would be getting, they will not be there. So then what happens? Then some of the tax incentives will not be there, taken away. So that will impact the profits. And the moment profits get impacted, you would start seeing that the glow or the luster in that stock starts slowly coming down. So keep track of some of that. Having said that, these things do not happen every day. So you do not have to start tracking your portfolio on a regular basis. You don't have to look into your accounts every day, to your demat accounts every day, to see how much did I make today, how much did I lose today, how much should I sell this, should this stock went up to 20%, this stock went up to 30%, should I sell this, should I hold this. You do not have to do that. If you have a plan, then you will be at peace, and then you would be able to do good investing, do logical good investing, right? So I talked about all of these things, what stocks to buy, then how much to buy, when to sell. But then there is one important thing, very important thing, or two important things rather, which is needed to make all of this possible, and that is discipline. Discipline, that I would not be selling till my targets are met, or till my criterias are met. or I would not get into a stock till my criteria is met, till the value at which I want to buy, till it is reached, I would not get into that stock. So that discipline is very, very important. If we are disciplined, then we will make sufficient amount of money from the market, and we will and we will be able to multiply our portfolios as well. But and how does discipline come in? How would we really, if our portfolio grows, the kind of you have put in a lot of money into the market, and then you would think that, how do I keep my calm, Shubhendu? How is it possible? So the only way to do that is to have the power of affirmation guide you and be your strength. Power of affirmation, power of positive affirmations, and belief in the God, belief in Almighty, that absolutely helps. If you meditate, if you are clear on what you want from the universe, things automatically, things automatically would help you to become calm, to stay calm. And that belief, that faith in God would absolutely help you. And that is the reason why meditation absolutely helps. Early morning meditation, whenever you feel that whether these things give power or not really, I would strongly recommend you to try this out, to try this and see the difference for yourself. And I'm sure that if you have done all of these things, then you would absolutely be able to get good amount of returns from the industry, from the stock markets. And and you would join the 1% of, you would join the top, not 1%, I'm not sure about the exact number, please don't quote me for that. You would be able to join the group of people who really make consistent profits from the stock markets. I'm also a learner. I'm also learning the process myself, and I'm thoroughly enjoying this process. I thought that I should create this video so that I share my learnings with you. If you liked the video, please do let me know in the comments below. And if you did not like some portion of the video, please do let me know that as well. And I'll try to make, I'll try to fix the videos in future. And if you liked it, please do like the video. Please do subscribe to the channel, and also share the video with your friends, so that we will all make a lot of money together from the stock markets, and stay disciplined and be great investors, be great logical investors.